Guys, welcome to the second trade recap for today. Um, this trade recap is for Thursday, October 17th, right? As you can see my trade right here. So going over trade recap, let me just erase these because these were lines from yesterday's trades. As I was going over the trade recap. Now, coming into the market today, right? Go over our conferences for the day. Jeez, I hate all this mess. Um, Coming into the market, right? We had 4 hour lows right here. That was pretty much it on the 4 hour. 1 hour, we had nothing pretty much to take out on buy side. Because coming into the market, like this hadn't developed yet. So we have low right here, 1 hour low right here, and essentially along with a small imbalance right here, and an imbalance down here, right? Again, once it was swept out, I started erasing them from my charts. Swept, swept. Let's go down to the 5 minute. Price came into this imbalance right here, and I'm gonna explain why I have this right here. So during this time, so as you can see, this was the 9:35 candle, and this is the 10 o'clock candle, or 10 o'clock candle. Go to the S&P 500, 9:35, and at the time 10 o'clock. So Nasdaq was the lagging index at the time, right? However, S&P came and swept a little lower, so essentially no more SMT. Now, why did I take a trade on the Nasdaq over the S&P? Well, the Nasdaq just after we got our retracement right here, we got our rejection right from the imbalance, and waited for that 5 minute retracement, which happened right here. At that point, let's go down to the 1 minute. Was looking at price and just nothing was looking favorable until we started getting rejection to the upside, right? We got a break of structure right here, and I was like, okay. And I marked out there was no fair rally gap yet, so I marked out from not range, but like this order block right here, which was the candles that came and swept liquidity from the top of the candle, not including the wick, all the way down here. Price came, tapped into it, and we got a strong rejection out of it, which is why I entered, right? Because I seen tap, if it was, whether it's an imbalance or an order block or equilibrium, which are all retracement tools. If there's a strong rejection, like if price is gonna go the other way, it'll be a strong rejection right off the bat, which we got right here, right? Strong rejection, and I entered right here as soon as I seen this candle closing up here. Entered first TP right here, second TP up here, and that was it for me. Price came, hit TP one, and brought stops to break even. And price came and literally shut the bed right here and stopped me out of break even. Not complaining. I made money for the day, so I'm happy. I feel like I executed the trade very well. One entry. Essentially, the whole trade idea executed well. I just entered prematurely, I guess, just too soon. But again, I'm happy with how I answered. I'm happy how I executed it all and risk managed. Again, this is a game of longevity, not get rich quick scheme. So, and at the end of the day, the only thing we can control in the market is risk management, the risk. So once we hit the first TP, brought stops to break even, got stopped out. Unfortunate, but handled risk very well. Didn't lose any money. I made money at the end, right? So things I could have done better. So essentially, I feel like because we got another 5-minute sweep of liquidity, I could have waited for another retrace, right? Because essentially, this was another retrace because it didn't close under these candles low. So could have waited for that, right? And as soon as that, what time was that at? 11. Jesus. Um, if I would have entered, I would have probably, started marking these fair rally gaps, seen this rejection, but the break of structure isn't until like right here or even right here. So I mean, it's not really worth it at that point. Um, and again, I don't trade. This trade would have been taken during lunch hour. If you trade lunch hour, this is probably what I would have taken. A risky trade because if you're waiting for the break of structure, it wouldn't happen until like right here or even right here for extra confirmation. And that risk to reward is not too rewarding if you're putting your stops under this fair value gap, right? So if I didn't take this trade, I wouldn't have taken a trade today at all. So in theory, I guess yeah, like if I didn't take this trade, I wouldn't have taken a trade at all. I favored the Nasdaq over the S&P 500 because just S&P 500 was struggling to push through this huge imbalance or fair value gap to the downside, right? So I was just like, yeah, no, like as soon as I kept seeing rejections down, I saw this candle, I was like, yeah, I'm sticking to the Nasdaq. The Nasdaq was just ripping through it. So um yeah, so and another thing that might help you guys and that I use sometimes is the Dow Jones. The Dow Jones is sort of like the opposite of the S&P and the Nasdaq. So if you could see like at 1402, if you look at 1402 or on the S&P 500. Let me show you. So at like not 14. Let me use a better example. Like 9:30, right? It was ripping up. It ripped up. It ripped up. It ripped up. 9:30. This shot the bed. They're kind of correlated in a way. Um, they move opposite directions. So this was chop work, but kept going down like 10 o'clock when Nasdaq and S&P were going up. So 10 o'clock, right? Like 10, 15, 6, 16. Between 10, like 10 and like 10, like 30, like 10, 15 and 10:30. Like price here was going up while on the Nasdaq it was going down. So they're kind of correlated in a way. I don't know if it helps some of you, but it kind of helps me sometimes. Just a little FYI. But overall, yeah, that was a trade that I took for day. Perfect execution. Couldn't have made a better execution, better risk management. I'm happy. In terms of trading, I think I did well today. Things I could have done better. Waited for the 5-minute retracement, but however, like that's way too late in the trading session. I don't trade during lunch hour. I'm a quick trader. Like I like going in and being out like quickly within the macro time, which is like 9:45 to 10:10, which is where price really gets its like volume going. So essentially, like once it's like 11 o'clock, I'm not looking for trading. Like I'm done. Like it's too late. It's lunchtime. Everybody's gone to lunch. No volume. Starts chopping like, you know. Yeah. So that's my trade recap for today, boys. In terms of in terms of news, um, there wasn't really much. Well, can I like log in? There we go. In terms of news, wasn't really much. There was a lot for today, but this week in general, there wasn't much. All these news came out before 5:30. But as you can see, tomorrow we have FOMC members speaking within later into the day. It shouldn't affect us too much. However, price should be a bit slow, a bit choppy and developing just because we have an FOMC member speaking. Price might want to wait till that happens to make its move. So just keep that in mind if you're trading tomorrow. That there might not be a trade setup, but and I use two different sources of news. So I use GoMoon, which is more in depth. So as you can see, like if I click on it, it shows you popularity high, volatility, impact on the market, medium, risk level. The trade is medium, macro impact, which is that time where I said 9:45 to 10:10, where it's when there's more volume in the market and price tends to make its actual move to where it wants to go. And then time sensitivity, which is like trading times, right, in the morning. Um, it's what I like about GoMoon, right? And it has more in depth like news, whereas like um on Forex Factory, not really, right? I mean, yeah, like you click on the folder, it tells you. Can I? Oh, right here. Sorry. Jesus. Click on the folder and it shows you like greater for if it's greater. Actual is greater than the forecast is good for currency and turns bad for the S&P 500. So like, some people don't know how to read this stuff. If the actual comes out greater than the forecasted, bad for the S&P 500, good for the currency. Comes out lower than the forecast, it's bad for currency, good for the S&P. However, like it's not the case for all of them. You got to really go through them to really see. But I mean, we avoid news in general. That's how we trade. We avoid news. We're not trading these news folders. But GoMoon has more in depth and more easy, user friendly. Like you see, Wednesday there was no news on the forex sector. However, on Wednesday there was news. 5:30 export prices. So like there's more in depth news on GoMoon, which is why I use GoMoon. It is you have to pay, and this is the reason why you have to pay for it. It's not that much, but it helps a lot. And taking news into account when trading is very, very huge, very helpful. Just an FYI. Tomorrow we have a lot of FOMC members speaking, a lot of speeches, or not, yeah, Federal Waller speech, Federal Bostic speech, Federal Kashkari speech, like building permits, housing starts, building permits. So things to keep an eye out tomorrow. With that being said, though, thank y'all for tuning in for the trade recap. Hopefully you caught a dub today too, or caught the full move. If your TP was all the way up here, yeah. So, with that being said, catch you on the next trade recap, boys. Peace.